What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we'll be covering the overall market. We will also cover the SOFI stock. We're going to be talking about bearish things that are happening, potentially bullish things that are going to be happening. We took off, I believe, about 5 to 6 days from the market because we've had, a lot of news come out with that CPI data. We're going to be covering that in today's video, which was, it blew my mind. A lot of you guys were saying that it was going to go down, it was going to go up. No one truly knew, but believe it or not, guys, inflation accelerated again, and that's why we had the stock market tanking. I believe the Nasdaq on the day the CPI data came out was down 5%. It was one of the worst drops in like a year and a half or something like that. So guys, this market volatility is going to continue to be insane, I guess, until inflation calms down. I guess inflation is what is controlling the entire market right now, because that is the data that just absolutely moves these indexes 3 to 5% every other month, guys. So until we get it under control, I believe, we're going to continue to see the same things. This is like the definition of insanity, okay? It's just a market we cannot control right now, okay? We have to remain patient, and hopefully, these rate hikes will work and we will see inflation come down eventually. And if you enjoyed this video, be sure to smash the like button. Let's try and get the video over 1,000 likes, and don't forget to drop a comment. I'm going to be commenting back to as many people as I can. And if you find any of this information useful, be sure to subscribe to the channel. Let's try and get the channel to 15,000 subscribers. Let's get into the video. All right, guys, this is when the CPI data came out. You can see this was Tuesday. Dow tumbled 1,200 points for worst day since June 2020 after hot inflation report. We can see if we scroll down a little bit, the Nasdaq right here dropped 5%, guys. Absolutely insane. And I believe the inflation we can see right here was up 0.1% month over month, guys. So I cannot believe it. After the inflation report a month ago, we declined, and now we're accelerating again. Guys, this is incredible. I thought we were going to go down, a little bit, just a teeny bit. Instead, we increased 0.1%. Core inflation rose 0.6% month over month. On a year-over-year basis, inflation is still at 8.3%, guys. So hopefully these rate hikes start to kick in maybe next month, and we can get down to 7%, guys, because we're truly not going to see these indexes correct or reverse back to where they need to be. I mean, we're down 30% on the Nasdaq as of today, I believe. And we can see we got even more bad data. Thursday today, Nasdaq drops more than 1% as market comeback stumbles. There was a market comeback on Wednesday. We could see here investors mulled over several economic reports that showed a muddy picture of the U.S. economy, guys. So we could see we got more data coming out. I don't know what this was, PPI or something, CPI earlier this week. It's just a rough market we're in because this data is not going to be absolutely incredible every time. And, sometimes we get good jobs reports. Just like last month, we got a decline in inflation. It's just insane volatility. That's what's going to control your money inside of the stock market, guys. Absolutely. We have zero control right now. Take a look at this, guys. Am I seeing this, or am I in a dream right now? 30-year fixed right now, 6.7%. Is this correct, or is my computer glitching? Please check your computer and drop me a comment. 15-year fixed, 5.8. The ARM, 6.6, guys. I cannot believe we're at 6.7. Okay, it has the credit score at, okay, like a 700. We'll jump it up a little bit. Perfect credit score, 800. 6.4% 30-year fixed, guys. What the heck is going on? When is the housing market going to cool off and truly not just sit there and stay the same? We need to get a correction, guys, because the pricing is just out of this world. Even with these mortgages at 6.4%, we're still not seeing a huge decline right now in anything, okay? Inflation is even going higher, so we have a lot of problems. Taking a look at the Nasdaq, guys, we can see 23.9% correction. If we grab that peak, we actually have a 28% decline. And from that little rally, we got that 2-week rally, we declined 12% in a matter of what, 3-4 weeks, guys. This market, 30% correction, guys. I believe we hit a 33% correction at one point. We need to get some good news. once again, it looks like we're in control, just with the Federal Reserve. Hopefully they get the inflation under control because, they're in control of it, with these rate hikes and stuff like that. Let's hope they make the right moves because I did not like that inflation report going higher, guys. That's why we're, losing these gains very, very quickly that we had. SPY, on the other hand, down 12.7%. Correction 18% right now. Of course, this is not going to have as big as a correction as the NASDAQ because the NASDAQ is completely technology heavy. But we got an 18% and a 28% correction on two of our indexes right now. We can see the market today, 1% red, 0.5%, 1.4 on the NASDAQ, 0.72 on the Russell, and SOFI managed to pull a green day today, but getting clobbered in the after hours. Guys, we were up 7% at one point. If you take, and count the 2% after hours, guys, what are we looking at? A 2% gain almost at one point as of right now. I mean, this is insane, okay? We are just, losing gains dramatically anytime we get some good news, but let's just be thankful we had a green day today inside of this market. Market cap, 5 billion market cap. What is that? 3 times sales we're trading at right now, 1.5 billion in revenue. I mean, 3 times sales is, absolutely insane for this stock. 60% growth. I believe a profitable quarter with student loans coming back could be on the horizon, maybe Q1 2023. So we're not that far away, maybe 6 months or so. And we're still taking, look, the after hours is dropping even more. So guys, right now, I mean, we're trading like a value stock, in my perspective, 3 times sales. That's very, very low for the type of growth that SoFi continues to show. And look at that, guys, a lot of red today. I mean, MongoDB 5, WeWork 5, Zscaler 3, Beyond 3, a lot of 2s, a lot of 1s, Meta, PayPal, Match, a lot of red today, guys. Look, we're at 50 percentile of our 100 growth stocks, and we're still in the red. If we just go to the top, Roku, ChargePoint, UiPath had a good day today, 5 and 7% gain. SoFi finished in the top 10, 3% gain right there with Robinhood. So it's just a crazy market. You're seeing some of the fintechs bounce back on a nasty red day. This market is unpredictable, guys. Massive volatility. You've seen this in, dozens and dozens of companies. You'll see random groups of stocks have good weeks, cloud out of nowhere, oil out of nowhere, tech, retail. There's just absolutely no patterns at all, guys. This is strictly day trading off of insane volatility, options, expirations, and stuff like that. It's a good time to average down, in my personal opinion. We will now take a look at some good news that we were actually getting, just the other day, yesterday. We got Bank of America decides to upgrade SoFi, citing student loan payments, NFL partnerships. I guess they're, just trying to maybe, put out some good predictions because they know SoFi is going to gain a lot of attraction very soon with the NFL season, student loan refinancing, starting back up when payments finally resume. And we can see that they jumped their price target from $8 to $9. And guys, I believe at one point Bank of America could have been at anywhere between $18 to $20, 6-9 months ago. Okay, so these guys have literally cut their price targets from, $20 down to $8. That's absolutely insane. I don't think you have to be a expert analyst to do something like this, guys. I believe a lot of these guys are guessing, but the truth is, I mean, he's stating out the facts. SoFi is going to be gaining market share right now. They're going to be getting their most profitable business back very soon. So I can definitely respect, him coming out now and, just trying to say the truth, even though, these are competitors technically, okay? And it sucks that a bank is able to cover a fintech. I've been telling you guys that for a long time now. We'll just listen to what this analyst had to say. A couple minute video on CNBC, and they're talking about SoFi. Anytime we get attraction, it's good news.
And that NFL season should provide a meaningful boost in engagement, the NFL season. Joining us now is the analyst behind the call, BofA Securities, Mihir Bhatia. Thought that the student loan cancellation of debt and postponement of payment was a headwind for SoFi.
Hi, Sarah. Thank you for having me. No, you're right. for the last 2 years, students haven't had to make payments on their student loans. And as a result, they weren't really thinking about, refinancing those loans to maybe a better rate or a lower rate away from the federal loans market. What the Biden administration announced was that, in addition to the debt, forgiving some debt, they also announced that this will be the final extension of the payment moratorium. As a result, what you're going to have is a lot of loan servicers reaching out to borrowers, letting them know that, hey, you're going to have to start making your student loan payments in the next starting in 2023. And we think what that's going to do is drive refinance volumes back to normal levels at SOFI. SOFI was doing $2 billion of refinance volume a quarter heading into before COVID, and they were down to 400 million last quarter. So we think that's going to bounce back pretty nicely here as borrowers think about the fact that they're going to have to start making those monthly payments and then try to find a lower rate, frankly.
Well, the stock is still down about 60% over the last 12 months. And then on the NFL season, we know they have the name of the LA Stadium, which won the Super Bowl last year. Right. Is this a marketing thesis here?
No, it absolutely is marketing. It's interesting. We did some analysis around just engagement, user engagement, Google Trends searches, app downloads for SoFi. And it's pretty remarkable that there's a nice uptick typically around Sundays and Mondays, and even more so when it's LA Rams home game. And so far, you see the benefit in engagement. And, you had the CEO also mention at a conference just this week, they gave us some internal numbers where, a brand awareness went from 2% to 8% last year during the NFL season, and it's now back down to 4%. And they expect it to increase further this year.
So you have a $9 target, Mihir. The street is worried about the turn in the credit cycle, higher interest rates, more speculative names like this that have been recently come public. Do you think it's overdone?
We think so. I would point out that, we had downgraded the stock previously just on some of the concerns you mentioned. But we do think what's happening now is that there's a fundamental improvement in the operations, right? Now, whether the stock gets to 9, in the short term, it's a little more difficult to say. Certainly, the market is a little more challenging now. But I think it's inarguable that the operating fundamentals for SoFi are going to improve as student loans come back. That is one of their most profitable businesses. It is their oldest business. Also, on the engagement side, you have seen a nice uptick in member growth. You're starting to see them monetize their members, adding more products and increasing engagement. So we do think that the business is going to be operating at a higher level, and operations will certainly improve. And we think valuation will follow.
Mihir, thank you. Barb, I don't think of you typically in a name like this, but would you?
All right, guys, we can see Sarah Eisen is definitely trolling, saying the same repetitive things CNBC does, nonstop, credit market, speculative names. They've just been doing that for so long, I can barely watch CNBC anymore. But this guy is pointing out, the business operations for SoFi are about to get a lot better with these student loan, refinancing volumes potentially coming back to pre-pandemic levels. That'll be huge. That'll be massive, net income boost on that portion of their lending business. And guys, I think we're going to be profitable maybe Q1 as a possibility. SoFi has that bank charter. They're going to be, lending out deeper and deeper across the nation in different states without any regulation. So I think things are going to be heading in the right direction for SoFi. Technically, they've done everything right the past 9 months. It's just this market absolutely sucks, guys. I try to not watch the market every single second with this inflation news every other week. Jerome Powell talking, guys. It honestly has frustrated me. As you guys can see on my YouTube channel, the videos have slowed down dramatically because, I'm not the type to just, be too repetitive of something that we can't control. I don't like to be that YouTuber that puts out clickbaits 24/7 to get views. So that's why I've slowed down on my YouTube channel, because I know there's not a lot of exciting things going on right now, and I want to be honest with you guys. That's why the videos have slowed down dramatically. But hey, let's get inflation down. Let's get the 30% correction on the NASDAQ coming back eventually, and then maybe we could see some of these fintechs make a comeback. I think tomorrow could get a little bit crazy, honestly, with these call options. We got 129,000 call options expiring tomorrow. But if you click that specific date of 9/16, you can see that there is absolutely insane numbers on the 650 calls. I gotta find them. Yes, guys, you can see right here, $6 and 650, 31,000 and 28,000 on the open interest, guys. So you could most likely see a SOFI, for sure, in between, that range tomorrow. Okay, probably expire in the 650s and the sevens. Absolutely worthless. That's just how it works, guys. If we finish out 649, these are going to 0 cents. Okay, so understand these are insane open interest on the 650s, sixes, and even the sevens now that I look at it. So we need to get by this week of call options, guys. We could see it definitely cools down the next 6 weeks, all the way up until 10/21. So that's a little bit of good news. So options are definitely a big part of the manipulation inside of this market. Robinhood's call options have slowed down, 50, 60% of, what they were during 2020, with those meme stocks. And it just looks like a lot of things are cooling off. But we, once again, got to get by these call options because, this is an easy way to hold down stocks, with these market makers. If you enjoyed this video, be sure to subscribe to the channel. We will be keeping you updated daily. Once again, guys, don't, stress over things that you can't control. Try to limit yourself from, looking over the same repetitive things nonstop. That's what I did, and it made me feel a lot better. I'm focusing more on work. Guys, the YouTube channel will pick up eventually. Okay, we're not going to be in a bear market forever. I believe this correction has been about 10 months or so. I believe we're in a recession. Growth has slowed for 2 consecutive quarters. Of course, administration doesn't want to admit that because it's going to make them look bad heading into midterms. There's a lot of different things to look at. But once again, guys, it just seems to be the same narrative is inflation, high. That's what's controlling the entire stock market. Lending's more expensive. Mortgages are skyrocketing to 7%. Inflation has to come down for things to cool off. So remain patient. And remember, with time, good things will happen. Once again, my name is Kyle. Hope you have a great day.